What's good, all my stock market investor and trader homies? It's your boy Kevin. This is Touchdown Trades. We're going to be talking about the stock market this week. Current events going on in the stock market, the disastrous jobs report that we saw last week, and talk about what it means for the stock market. We're also going to be talking about what Cathie Wood just said. She is changing her tone. She has been one of the most bullish faces out there regarding the stock market. However, she's switching up and she says there's some cause for concern regarding a stock market crash. We're also going to be looking at crypto. Is crypto the new gold? It used to be all your tinfoil hat conspiracy theorists would go out and buy gold. Now it looks like cryptocurrency is going to be the new hedge against the inflation of the US dollar. So we're going to be looking at that and what it may mean for cryptocurrency prices going forward. And we're also going to be looking at a couple of stocks that I think are good deals at their current prices. So you're going to want to stay tuned for this one. We got a lot of information and a lot of important information to talk about in today's video. If you like free money, I like free money, check out the link in the description for Webull. It's the broker that I use every day. It's the broker that I have pulled up on the screen. Great, awesome charts, free from Webull. Get 2 free stocks valued up to over $2,000 when you use the link in the description after the video's over to open a new account. So check that out. Free money. What's not to like about free money? I have the SPY chart on the screen. Last week, nothing was new. We were chugging higher. We bottomed out. And over the last couple of weeks, we moved higher. But Friday, something very interesting happened. Let's look at a 5-minute chart, and we can see that Friday, we opened up, we were chopping around, and we just jumped off of a cliff. What happened? Well, we got a jobs report that was absolutely awful. And I mean, it's one of the worst jobs reports that I've ever seen in my decade plus of being involved in the stock market. We were expecting 700,000 new jobs in the month of August. We only saw 200,000 new jobs in August. It was disastrous. A horrible month for the economy. But the stock market bottomed out and went back up and retested those highs. So the market didn't really crash at all. We didn't really see any downside from this jobs report breaking, just a huge miss. So what the hell's going on? How can a jobs report be so bad and the stock market not respond that negatively? Well, here's my opinion. I think we're seeing a short squeeze, and early short sellers who are shorting these big blue chip stocks, they're shorting the overall market. They are getting squeezed out of their positions. And then once those early shorts are squeezed out, we see the continued downside. I think we're looking at a market that is too expensive based on economic fundamentals. The U.S. economy added about 235,000 new jobs in August, according to the U.S. Bureau of Labor Statistics. This came out on Friday. So we added jobs. What's the big problem, right? It's an economy that's growing. It's adding new jobs. Well, we were expecting 728,000 new jobs to be added in August, but we only saw 235,000 new jobs. That expectation was already priced into the market. We're already trading at all-time highs. You cannot be missing economic numbers, economic data numbers that bad when you're trading this high. So how bad was it compared to previous months? Well, in June and July, we saw over 1 million jobs added in July and 962,000 added in June. We saw 230,000 added in August. What the hell happened? Well, I think the Delta is to blame for this. I think we're seeing a slowdown again. I think we're seeing companies prepare for the worst, right? You hope for the best, you prepare for the worst, and I think that's what we're seeing companies do right now. Some more interesting data that came out in this report is that we saw consumer prices rise 5.4% in July 2021 over the same month in 2020. That is insane. Milk, everything is more expensive by 5%. That is like you getting a 5% raise at your job and it not doing anything for you. And if you didn't get a raise, then you're losing money. It is crazy the amount of inflation that we're seeing. You saw Joe Manchin say that he will oppose the $3.5 trillion bill. What does this mean? It means that the Democrats have a long road ahead of trying to get this bill passed. This bill is so important for the stock market. I don't think it can be overstated how important this bill is for this stock market to maintain these prices. If we don't see a bill of this size come out and get passed in the next 12 months, the stock market is going to roll over. I would bet my left nut on that fact. If this bill isn't passed, the stock market will be under, the SPY will be trading under 400, probably under 350 in the next few months. So that is something we have to pay attention to. Joe Manchin, he is going to be the key role, the key player in this bill getting passed or not. Also, Kristen Sinema, those are two people you need to keep an eye on. So Joe Manchin is currently saying that he is hesitant to pass this behemoth. We have also started to see Cathie Wood, who was one of the biggest bulls in this run-up. She was one of the most vocal about this market over the past couple of years, being hot and wanting to invest in innovative, disruptive tech. We have started to see her change her tone on this market. She's down on travel. She's down on retail. She's down on auto sales. And she had just said that she expects the S&P 500 Ford PE ratio, which is the Ford price to earnings ratio, to cap out in the low to mid 20s.
Are you worried that as rates go up, those stocks could come down?
Well, I do believe if rates were to take a sharp turn up, that we would see a valuation reset, and our portfolios would be prime candidates for that valuation reset, of course. Now, one of the things that I've found interesting over the last really 20 years is that the S&P's PE ratio tends to peak out in the 20 to 25 times range of the forward earnings.
Well, what are we at right now? Right now, we see the S&P 500 Ford PE ratio in the low to mid 20s. So she's basically saying she thinks this market may have topped out. All right, so why is this stuff so important? Why does this jobs report even matter? Okay, well, we can look at these reports, take the information and just dissect them and kind of help to form a thesis on where we think the stock market is headed. So in this report, we saw that the U.S. economy is growing slower than we initially expected. Well, what sectors performed well in this report? Well, private education, baby. Private education is growing. It added more jobs than expected. The restaurant industry lost jobs over the past month, which is crazy because around me, these restaurants are packed and they just can't hire people. I don't know what's going on, why they can't hire people, and why they're losing jobs. Like I said, I think businesses are preparing for the worst. But let's take a look at private education. It's growing. It's still growing even though the rest of the economy is kind of slowing down. So I want to be looking at some private education stocks. People are going to be looking for ways to improve their skill set. We're seeing a disconnect in the economy and workers, right? We're transitioning away from needing a lot of manufacturing jobs, auto industry jobs, and we're transitioning. It's just the way it is. And I think people are going to be looking to improve their skill set via online and private education, as well as parents looking to pull their kids out of the public school system and throw them in private education systems. So I think private education stocks are still going to blow up, even though the overall stock market is kind of topping out. One of my favorite education stocks is Chegg, ticker CHGG. Chegg used to be the online textbook company. Now they're completely digital. They're kind of shifting away from the textbook model. They're offering study guides, classes, courses, and I think Chegg is too cheap at today's prices. If we look at a monthly chart, this stock has been very strong, still a lot of momentum, running up from $3 all the way up to $86 a share over the last few years, highs of 115. I think we retest those highs and break out over the next 6 months. Bitcoin continues to run as investors freak out, pull their money out of wherever they were hiding it, and try to beat inflation. I think cryptocurrency is the new gold. I think cryptocurrency, people, it's supposed to be a currency, but that's not what it really is. People are using it as a hedge against inflation. They don't trust the US dollar as much as it's just basically kindling right now, and I think that's the way it's headed. I think crypto, Bitcoin, and Ethereum. Don't go looking for some crazy altcoin to try to make 10,000% or more. It's just stupid. Stick with Bitcoin, stick with Ethereum. Those are the two that have the biggest chance of success, and I think they both continue to go higher as investors flock into cryptocurrency looking for a hedge against inflation. All right, guys, that's going to wrap up the video. I hope you got something of value from it. If you did, hit that like button for me. Remember to subscribe and get your 2 free stocks from the link in the description. I'll catch you guys in the next video. Peace.